अस्सलाम वालेकुम। आज आपकी मुलाकात डॉक्टर तलत अफजा से मनी एंड बैंकिंग के 15th लेक्चर में हो रही है। हमारा आज का लेक्चर बेसिकली पिछले ही लेक्चर की कंटिन्यूएशन है, जिसमें आपको याद होगा कि वी स्टार्टेड टॉकिंग अबाउट द बॉन्ड्स। उससे पहले हम ये कह रहे थे कि हमारे फाइनेंशियल सिस्टम के जो इम्पोर्टेंट कंपोनेंट्स हैं उनमें फाइनेंशियल इंस्ट्रूमेंट्स आर वन ऑफ द कंपोनेंट्स। And within the financial instrument, in the previous 2-3 lectures, we started talking about the bonds. So, आज भी we are going to continue with the same lecture, but before we start the new topic, I would like to revise कि हमने पिछले lectures में क्या-क्या topics जो हैं वो cover किए हैं। So, we basically said कि bond is an instrument through which we channel the excess savings from the savers to the borrower. Issuer of the bond basically is the borrower, and the investor or the purchaser who purchases the bond is the lender. And then we talked about various types of the bonds. There we said we can talk about the zero coupon bond, where the only payment is made at the time of maturity. And then we talked about the investments in the form of coupon payments or the coupon paying bond. Coupon paying bond basically has two components. One component is the coupon payment during the life of the bond, and then the payment of the face value or the maturity value at the end of the maturity period. When we talk about another type of loans, जिसमें हम leasing and the other fixed payment loans की बात करते हैं, they are also one type of the bond. In fact, हमारे जो zero coupon bond है and this fixed payment loans जो है, इन दोनों को when we combine, we can talk about the coupon paying bond. And finally, we talked about the console, and we said the consoles are those type of bonds without any maturity. So during the life of the bond, the investor or the purchaser or the lender keep on receiving the interest or the coupon payments. But they have infinite maturity period. The life is infinity. How do we find out the prices for all of these different types of bonds? The basic formula is the same. And there we use the concept of finding out the present value or discounting. Whatever future payments we are receiving, if we discount them, we come up with the price of that particular bond. Zero coupon bond में सिर्फ there is one maturity payment and we discount it. Coupon paying bond में we have two components and we discount both the components. Fixed term loans के अंदर भी fixed payment जिसकी होती है हमारे पास, we talk about the amortization of those payments which we are going to make in future. Console में there is a simple formula, we take the coupon payment and divide it by the interest rate. तो ये तो थे हमारे different types of bonds. And then we started talking about the return on the bond. We said why individuals or the investors will be willing to invest in the bonds, because they are looking forward to some return on that particular investment. Return के अंदर we talked about yield to maturity, and we said what basically is the idea of yield to maturity, that if you make an investment in a bond, which means if you purchase a bond, definitely you start receiving certain amount of payments, और वो payments जो हैं they are dependent on the characteristics of the bond. यानी यही जो different categories हैं, इन्हीं के ऊपर हमारी payments जो हैं वो rely करती हैं, depend करती हैं. Think about a coupon paying bond. Then what will be the yield to maturity? We say yield to maturity is that rate of return. If we use that rate of return, then the future values are the payments which we are receiving. And we discount those payments by this discount rate, and if that is equal to the current market price of that bond, then that rate is known as the yield to maturity. In other words, we can say that our yield to maturity is that rate of return that if investor keeps that investment in the bond till the time of maturity, what rate of return that individual investor is going to get out of that particular investment. That is the basic idea of yield to maturity. Calculation wise we can say कि किस तरह calculate कर सकते हैं. We talk about all the future payments which we are going to receive, and then discount rate, the value, the sum of all of these future discounted values should be equal to the current market price. So this is basically the yield to maturity. Then is another idea of current yield, that if you are not interested to find out the long-term rate of return which is yield to maturity, and if you only focus on the short-term rate of return, then how do we calculate it? We simply look at the current coupon payment which we receive as a ratio to the price we paid for that particular bond. The current payment received in the form of the coupon payment is the current return, and then divided it by the investment which we have made, which is the price of that particular bond. The ratio of both of these gives us the current yield. And then we also talked about another possibility, and that possibility was that holding period yield. That suppose we make an investment in a long-term bond, say a 10 years bond, but we do not want to hold the bond till maturity. What do? There is a possibility that we can do one thing, that we can sell the bond off in between. So if we can sell the bond in between and we try to calculate the holding period return, the time period during which we made an investment in that particular bond and then we sold that bond in the marketplace. So our holding period return has two components. The first component is the current yield and the second component is capital gain and loss. Now what is the source of this capital gain or loss? The source of the capital gain or loss is that during the time period when the bond was issued and when we are trying to sell the bond in the marketplace, there is every possibility that the interest rate may change. And we already saw that there is a negative relationship between the interest rate of a bond and the price of the bond. So when the market interest rate, let's suppose, goes up, the price of the bond will go down. And if the market interest rate goes down, then the price of the bond will go up. So any change in the price in the marketplace and the price at which we purchase the bond gives us the capital gain or loss. So when we talk about the holding period return, there is a possibility that during the time period in which we purchased the bond and then we sold the bond, that the price may have gone up or the price may have fallen down. In any case, when we look at the holding period return, we talk about the calculation of both of these components. The first component is the current yield and the second component is the capital gain and loss. Adding them together gives us the holding period return. So after completing our discussion on the return, when we make an investment in the bond, the possibility of yield to maturity, the possibility of the current yield, and how do we calculate the holding period returns or the yield. We started talking about how the price of the bond is determined in the marketplace. And there we assume there is no change in the interest rate. Then we said bond, like any commodity, can have a demand for bond and it can also have a supply of bond. When we talk about the supply of bond, when we talk about the demand for bond, just like any ordinary commodity, what we saw in microeconomics, अगर आपने microeconomics का कोर्स पढ़ा हो, तो पहले एक दो लेक्चर्स जो होते हैं, they are always related to the demand and supply. And that only difference is there we talk about the supply and demand for a particular commodity or a good. But here we are talking about the supply and demand of a particular bond. The demand for bond, it comes from where? Of course, who would be willing to purchase the bond are the investors. And the investors are the lenders. And we see a negative relationship between the price of a bond and, of course, the quantity demanded of a bond. So our demand curve for the bond will be a downward sloping curve. Then we talk about the supply of a bond. First of all, from where we get the supply of bond? The supply of bond comes from the issuer. And the issuers can be a corporation, can be a government. And what is the relationship between the price and the quantity supplied? At higher price, they will be willing to offer higher quantity of bonds for sale. At lower prices, they will be willing to issue fewer bonds. So we see a positive or a direct relationship between the price and the quantity supplied of bond. Putting both of these together, the demand for bond, which is a downward sloping curve, and a supply for bond, which is an upward sloping curve, we come up with the equilibrium price. Now, the equilibrium price is a price at which there is no tendency for further change. And where both the sellers as well as buyer, they agree to trade that particular commodity, and in our particular case, that is the bond. By chance, if we look at a scenario where the price of the bond goes above the equilibrium price, or if it falls below the equilibrium price, then what happens? So in that particular scenario, there definitely will be a competition in the market. If we start talking about a scenario where the price is above the equilibrium price. So whenever our price is above the equilibrium price, definitely the suppliers, they will be willing to supply more. The lender will be willing to borrow more, issue more bonds. But at the same time, from the demand perspective, the investors definitely will be willing to invest less in the bond because the bonds now are more expensive. In order to sell more, there will be competition among the borrower. The borrower are the issuers. Therefore, what happens? In order to sell their particular bond, they have to lower the price. So, competition among the issuer or the borrower will push the price down towards the equilibrium price. Similarly, if we look at a scenario in which the price of the bond in the marketplace is below the equilibrium price, then what happens? Of course, at that price, more and more people will be willing to purchase the bond, which means the investor will be willing to invest more in bond. But at the same time, the issuer or the borrower, they will not be willing to sell the bonds at that lower price. So there will be competition among the investors or the lender to purchase the bonds, and therefore that competition will push the price up towards the equilibrium. So finally we come to the point where there is equilibrium price in the bonds market and there is no tendency for further change. Today we'll continue with the same, the determination of the price, and of course there are certain factors which can shift our demand curve, or it can also shift these factors. There are certain factors they can also shift our supply curve. Basically, demand curve is a combination of the price and the quantity. The supply curve is also a combination of price and the quantity. So any change in the price will keep us moving along the same curve. But there are other factors due to which the quantity demanded and the quantity supplied may increase at the same price level. And these factors are able to shift either our demand curve or the supply curve. So let's look at various topics which we are going to cover today. We'll talk about the factors which can shift the supply curve, and then the factors which can shift the demand curve. And finally, if the equilibrium is restored, then if there is a change in such a factor in which both the supply and the demand curve both can shift at the same time, which means simultaneous shift in the demand and supply, then what will be the equilibrium price? And there the final effect is going to be dependent on कि हमारे उस फैक्टर ने डिमांड कर्व को किस तरफ शिफ्ट किया और सप्लाई कर्व को किस तरफ शिफ्ट किया. And ultimately we'll see whether the price is going to go up or the price is going to go down. And finally, we'll talk about what are the factors which contribute towards the riskiness of our bonds. And when we talk about the different factors, basically we'll focus on 3 different sources of risk. The first one is the default risk. The risk that the issuer of the bond or the borrower will be unable to make the payments. Now those payments can be the coupon payments and they can also be the amount of the maturity. And then we'll talk about the interest rate risk. If the interest rate in the economy fluctuates, then how our risk of the bond is affected by that fluctuation in the interest rate. And finally, of course, the expected rate of inflation. And the change in the expected rate of inflation is going to have an impact on the riskiness of the bond and therefore the price and the yield of the bond. So we start our discussion with the factors which can influence the supply of bond. Our very first factor is the change in the government borrowing. As we already said, long bonds, they are issued by the corporations known as the corporate bonds, or they are issued by the government known as the treasury bonds. On a short-term basis, both the corporations and the government also issue short notes known as the T-bills issued by the government and the commercial papers issued by the corporations. Whenever the government is in need of borrowing, why the government will be in the need of borrowing? We talk about the government budget. The government budget has 2 components. One is the revenue and the other is the expenditures. The government basically collects its revenue through different types of taxes, direct or indirect taxes. And then after collecting this amount from the general public and the businesses, government makes expenditures. These expenditures can be on the development side or the non-development sides. So for any particular year, whenever there is deficit in the budget, for example, the expenditures are more and the revenues are less, then the government has to finance that deficit. उस deficit को finance करने के लिए the government goes for the borrowing. And one form of the borrowing is by issuing the long-term bonds, the T-bonds. And what happens now is the government basically has increased the supply of bond. And the increase in the supply of bond will be a rightward shift in our supply curve. Go back to our microeconomics course, जिसमें ये होता है कि whenever there is increase, and we have to reflect that in any curve, whether it is negatively sloped or whether it is positively sloped, we have to show the increase as the rightward shift. So when we talk about the increase in the supply, our supply for bond curve is going to shift towards right. Assuming there is no change in the demand for bond, what is going to happen? Definitely what we have is a downward sloping demand curve and upward sloping supply curve. The increase in the supply is going to shift our supply curve towards right. And holding the old demand curve constant, what will happen? The shift in the supply curve will result in a decrease in the price level. And then we also discussed in the previous lectures, the price and the yield, or the price and the interest rates, they are negatively related. So when there is increase in our supply curve, shifting the supply curve towards right, what will happen? Our price has gone down, but as a result of that decrease in the price level, our yield on the bond will increase. So this is the first factor which can shift our supply curve. There are other factors as well. Among those factors, let's talk about the inflation. The second factor which can shift our supply curve can be the inflation rate. Now, if the rate of inflation in any economy goes down, what happens? The decrease in the inflation basically results in lesser cost in real term. And as a result, the supply of the bond basically will increase. The supply curve is going to shift towards right. And again, assuming that demand curve remains at its previous level, the increase in the supply is going to result in a decrease in the price level. And then we can also talk about another factor, which is the change in the general business conditions. Suppose we are talking about the stage of the business cycle where the economy is on the expansion. When the economy is expanding, what happens? The overall investment activity definitely goes up. And therefore, in order to finance the investment projects, the investor has to borrow more. And when the investors have to borrow more, they definitely will issue more bonds. By issuing more bonds, we basically are looking at a scenario where the supply for bond curve is shifting towards right. When the supply curve shifts towards right, what happens again? Assuming there is no change in the demand, our demand curve, supply curve is shifting towards right, holding the demand curve constant, there will be again a decrease in the price level and of course an increase in the yield. The reverse is true when we have contraction in our economy. During the recessional period of recession, what happens? The overall economic activity slows down. With the slowdown in the economic activity, fewer investment projects will be undertaken and therefore fewer new bonds will be issued. And therefore our supply for the bond may come down. The old bonds will be maturing and the new bonds will not be issued. So overall, the bonds which are issued and they are in circulation in the economy, they will decrease and our supply curve will shift towards left. Holding the demand curve constant, this will result in an increase in the price of bond and a decrease in the yield on the bond. So what we can do is we can show these increased borrowing either by the government or by the corporations. Because when we are saying the government has to finance the budget deficit, the government will be issuing more bonds. So then the government is borrowing more. In the period of expansion, then definitely the corporations will be undertaking more investment projects. So the corporations will be issuing bonds. No matter whether the borrower is the government or the borrower is the corporations, the ultimate result will be increased borrowing. And how we are going to show that? Now we can show that with the help of this particular graph. So what we have taken on this graph is, on the x-axis we have taken the quantity of bonds, on the y-axis we have taken the price of bonds. Increased desire to borrow, whether it is by the government or whether it is by the corporation, in any case, our supply curve is going to shift towards right. And that is our shift of the supply curve S0 to S1. S0 is upward sloping original supply curve and D is the original demand curve. And our equilibrium was at E0 and the equilibrium price is P0. With the increased desire to borrow, what happens? Our supply curve shifts towards right from S0 to S1. Holding the demand constant, our new equilibrium is at E1. So at this new equilibrium, our new price is P1, which is lower than the previous price of P0. So when the borrower desires to increase the borrowing, the bond supply curve shifts towards right. That results in lowering the prices and increasing the interest rates. So no matter whatever is the source of this shift in the supply curve, ultimate result will be a decline in the price level and increase in the interest rate. So overall what we can do now is that we have discussed three factors which can shift our supply curve. And then the shift in the supply curve, and that shift we assumed is towards the right. So that shift in the supply curve will result in a decrease in the price level and increase in the yield or the interest rate. So all of that we have summarized with the help of this particular table. So in this table we have taken the factors that increase the bond supply, lower the bond prices and raise the interest rates. So in the first column we have taken the change, and in the column number 2 we have taken the effect on bond supply, bond prices and the interest rate. So the very first factor is an increase in the government desired expenditure relative to its revenue. जैसे कि मैंने पहले कहा था कि गवर्नमेंट किस वक्त बॉन्ड इशू कर सकती है. वन पॉसिबल सिनेरियो इज जब गवर्नमेंट के एक्सपेंडिचर्स आर मोर देन द गवर्नमेंट के रेवेन्यू. सो इन ऑर्डर टू फाइनेंस द डेफिसिट, गवर्नमेंट इश्यूज मोर bonds. They are trying to borrow from the general public by issuing the bonds. So that will result in the bond supply curve shifting towards right, and as a result bond prices will go down and the interest rates will go up. Then the second change, we have assumed an improvement in the general business conditions. जैसे कि मैंने पहले कहा कि अगर हमारे बिजनेस साइकिल का एक्सपेंशनरी फेज हो तो then what will happen? The bond supply will shift towards the right, bond prices will go down and the interest rates will go up. And finally the impact of the inflation. And we said, suppose there is an increase in the expected inflation and it will reduce the real cost of borrowing. कि जब हमारी इन्फ्लेशन बढ़ेगी तो इन रियल टर्म जो होगी हमारी कॉस्ट ऑफ बोरोइंग जो है वो कम हो जाएगी, यानी रियल इंटरेस्ट रेट जो पे करेगा हमारा बोरोवर दैट विल बी लेस. सो बॉन्ड सप्लाई विल शिफ्ट टुवर्ड्स राइट, बॉन्ड प्राइसेस विल गो डाउन and the interest rate will go up. So these were the factors due to which our supply curve can shift, and as a result the price of the bond will change and the interest rate will also change. Now we are going to discuss certain other factors, and these factors will result in shifting the demand for bonds. And the very first factor we are taking is the wealth. It's quite logical कि जब भी हमारी वेल्थ में इजाफा होता है हमारी ओवरऑल कंजम्पशन लेवल जो है दैट गोज अप, बट एट द सेम टाइम वी हैव मोर टू मेक इन्वेस्टमेंट्स. जब हमारी वेल्थ इंक्रीज होगी तो डेफिनेटली वी विल लाइक टू मेक मोर इन्वेस्टमेंट्स, एंड द इन्वेस्टमेंट कैन आल्सो बी इन द फॉर्म ऑफ परचेजिंग अ बॉन्ड. कि बॉन्ड में भी हम इन्वेस्ट करना चाहेंगे, दूसरे एसेट्स में भी इन्वेस्ट करेंगे पर बॉन्ड में भी इन्वेस्ट करेंगे. बॉन्ड में इन्वेस्ट करने का मतलब ये है कि बेसिकली वी आर टॉकिंग अबाउट, जैसे कि पहले कहा था कि बॉन्ड की जो डिमांड है दैट कम्स फ्रॉम द इन्वेस्टर्स, और जब इन्वेस्टर्स की वेल्थ बढ़ती है दे वुड लाइक टू मेक मोर इन्वेस्टमेंट इन द बॉन्ड्स, एंड एज ए रिजल्ट व्हाट विल हैपन कि जो हमारी इकोनॉमी ग्रो करती है हमारी वेल्थ इंक्रीज करती है एंड आवर डिमांड फॉर द बॉन्ड विल increase. Increase in the demand for bond, just like any other curve, क्या होगा? Will be reflected as a rightward shift in our demand curve. अब हमारा demand curve जो है that is negatively sloped, और उसमें rightward shift will result in an increase in the price of bonds and a decrease in the return on the bond or the interest rate on the bond. ये तो था हमारा पहला फैक्टर. Then is the next, and that is about the expected inflation. जैसे कि कहा कि issuer is also going to look at the real cost of issuing the bond. हमारा investor will also be looking at the real return on the bond. And the real return on the bond is our nominal return adjusted for inflation. तो अगर हमारी inflation rate कम हो जाता है, the expected rate of inflation in future, if that decreases, what happens? Then the real return on the bond will increase. Decrease in the inflation will result in an increase in the real return on the bond. Therefore, जब return बढ़ेगा, people would like to make more investment in the bond, and therefore bond का जो demand curve है, that will again shift towards right. An increase in the bond demand will result in the increase in the price level, and of course हमारा price level और return या interest rate on the bond जो है वो negatively related है. तो जब हमारे bond की price will go up, तो क्या होगा कि हमारा interest rate जो है that will decrease or that will decline. Then we talk about the return on the bonds relative to the return on other factors. So expected return on stocks and other assets. क्योंकि जब हमने इन्वेस्टमेंट करनी है, we are talking about the portfolio. An investor having a good investment strategy will not make investment in only one financial instrument. Rather, हमने जैसे पहले diversification की बात की थी, and we always said कि a good investment strategy is to diversify, to spread out your investment in different categories. Do not put all of your eggs in one basket. तो यहाँ पे भी क्या होगा कि अगर हमारे bond के rate of return, expected rate of return is higher in comparison to the other financial securities or the instruments, for example stocks or the options or any other financial instrument, so what's going to happen? जब return, expected return is higher, then the people will make more investment in the bonds, and the demand for the bond curve will again shift towards right. Now shifting the demand curve towards the right will result in an increase in the price of bond and therefore a decrease in the yield on the bond or the interest rate on the bond. जैसे कि पहले हमने कहा कि हमारी price of a bond and the interest rate जो हैं they are negatively related. Then we talk about some other factors. So far we have talked about the wealth, we have talked about the expected inflation, and then we have discussed the relative interest rate or the return on the bonds in relation to the other investments. So the fourth factor can be risk relative to the alternative. We already said that whenever investor is making an investment, there is every possibility that different investment opportunities are having different level of risk. तो risk level के साथ जो है उसका return की जो है expectation भी change होती है. अगर bonds जो हैं in relation to the other investment opportunities or alternatives, if the bonds are more risky, then what will happen? Then the investment in the bond will decline. But if we assume that in relation or in comparison to other investment opportunities, if bonds are less risky, then what will happen? The demand for bond will increase. So the increase in the demand for bond will result in increase in the prices of bond and a decrease in the interest rate. And finally, we can also talk about another factor which can influence the demand for bond, will result in shifting the demand curve, and that is the liquidity of the bonds in comparison to the other investment opportunities. तो उसमें let's go back and define the liquidity again. पहले जब हम मनी की बात कर रहे थे उस कंटेक्स्ट में हमने बात की थी कि money is the most liquid asset which is available to any investor. तो liquidity क्या है? The ease with which an investment can be converted into cash. तो हमारे पास हमने कहा था कि कैश इज द मोस्ट लिक्विड, देन योर डिमांड डिपॉजिट, एंड देन वी कैटेगराइज्ड आवर different investment or the wealth holding as per the liquidities. अगर हमारा बॉन्ड जो है is more liquid, और liquid कैसे होता है कि whenever we take the bond to the marketplace, we try to sell it off. We can easily get the price for the bond without any loss in the value. The ease with which the bond can be converted into cash is known as the liquidity of the bond, and without any loss to the original investment. So if the bond is liquid, what will happen? The demand for bond will increase and our demand curve will shift towards right. So shifting the demand curve towards right, क्योंकि हमारा demand curve is negatively sloped, will result in increase in the price level and decrease in the yield or the interest rate. ओवरऑल अगर हम इन सारे फैक्टर्स को इकट्ठा करके देखें तो सो फार whatever factors we have discussed, we have taken one aspect कि all of these factors resulted in an increase in the demand for bond and definitely an increase in the price level and decrease in the interest rate. So graphically how we are going to show it? So the shift in the bond demand, when there is an increase in the investors' willingness to hold bonds, the bond demand curve shift towards right, increasing the bond prices and reducing the interest rate. So what we have taken here is the quantity of bonds on the x-axis and the price of bond on the y-axis. Originally, our demand curve is a downward sloping curve D naught and the supply curve is S. So increased demand for the bonds for whatever factor we considered or discussed so far will shift the demand curve from D naught to D1. Therefore, our equilibrium will shift from E0 to E1 and it will result in an increase in the price level from P0 to P1. And of course, a negative relationship between price and the interest rate will push the interest rate downwards. Now, all of these factors can be summarized in the form of a table, and these are the factors which can shift the demand curve. And these factors are summarized in column number 1, and then the effect of the shift in the demand curve is summarized in column number 2. So an increase in wealth increases the demand for all assets, including the bonds. Therefore, bond demand shifts towards right, bond prices will go up and the interest rates will go down. Secondly, a reduction in expected inflation makes bonds with fixed nominal payment more desirable, and as a result, bond demand shifts towards right, bond prices will go up and the interest rates will go down. An increase in the expected return on the bond in relation to the expected return on alternatives make bonds more attractive. That results in an increase in the demand for bonds, shifting the curve towards right, and as a result, the bond prices will go up and the interest rates will go down. A decrease in the expected future interest rate makes bonds more attractive. Bond demand will shift towards right, bond prices will go up and the interest rates will go down. And then a fall in the riskiness of the bond relative to the riskiness of the alternative makes bond more attractive. Bond demand will shift towards the right and the bond prices will go up and the interest rates will go down. And finally, an increase in the liquidity of the bond relative to the liquidity of the alternatives make bonds more attractive. And once again, what we will have? A shift in the demand curve towards right, increase in the price level and a decrease in the interest rates. So what we have done so far is we have talked about the different factors which can shift the supply curve. We have talked about the different factors which can shift the demand curve. Now we are going to look at a scenario in which there is a common factor, and that common factor can shift both the demand as well as the supply. And then we are going to look at what is going to happen in the equilibrium position. And let's take an example of increase in the expected inflation. When the expected inflation rate goes up, what happens? We'll analyze it from the supply point of view, then we'll analyze it from the demand point of view. So an increase in the expected inflation shifts the bond supply to the right and the bond demand to the left. क्योंकि अभी हमने पहले देखा था कि जब हमारी इन्फ्लेशन बढ़ती है तो क्या होता है कि हमारे पास जो इश्यूअर है, दी बॉरोवर, एक्सपेक्टेड रेट ऑफ इन्फ्लेशन के बढ़ने से उसकी रियल कॉस्ट जो है वो कम हो जाती है, जिसकी वजह से दे आर विलिंग टू सप्लाई मोर. एट द सेम टाइम व्हेन वी लुक एट द डिमांड, जब इन्फ्लेशन रेट बढ़ जाएगा तो उससे द रियल रिटर्न विल डिक्लाइन टू द इन्वेस्टर, और रियल रिटर्न कम होने की वजह से डिमांड फॉर बॉन्ड विल डिक्रीज. तो एक तरफ हमारा एक्सपेक्टेड रेट ऑफ इन्फ्लेशन जो है उसके बढ़ने से सप्लाई कर्व शिफ्ट होता है टुवर्ड्स राइट, बट डिमांड कर्व जो है इज शिफ्टिंग टुवर्ड्स लेफ्ट. ओवरऑल क्या है? आवर सप्लाई कर्व इज अ पॉजिटिवली स्लोप्ड कर्व, अपवर्ड स्लोपिंग कर्व. उसका शिफ्ट टुवर्ड्स राइट इज दिस वे, और दूसरी तरफ जो हमारा डिमांड कर्व है वो नेगेटिवली स्लोप्ड है, उसका लेफ्टवर्ड शिफ्ट जो है दैट इज टुवर्ड्स द बॉटम. ओवरऑल अगर हम इन दोनों को देखें तो दैट विल रिजल्ट, द टू इफेक्ट्स रीइंफोर्स ईच अदर, रिजल्टिंग इन अ लोअर बॉन्ड प्राइस एंड अ हायर इंटरेस्ट रेट. एंड दैट वी हैव शोन on this particular graph. The quantity of bonds taken on the x-axis, the price of the bond taken on the y-axis. D naught and the S naught are the original demand and the supply curve with the equilibrium at E naught. With the increase in the expected rate of inflation, हमारा supply curve will shift towards right. So it has shifted from S naught to S1. Demand curve is going to shift towards left from D naught to D1. ओवरऑल क्या है कि हमारा इक्विलिब्रियम हैज शिफ्टेड फ्रॉम ई नॉट टू E1 एंड द प्राइस हैज कम डाउन फ्रॉम P नॉट टू P1. अब दोनों ही फोर्सेस जो हैं, डिमांड शिफ्ट एंड द सप्लाई शिफ्ट, इज रीइंफोर्सिंग ईच अदर एंड द प्राइस इज गोइंग डाउन फ्रॉम P नॉट टू P1. सो द रिजल्ट इज वेरी क्लियर. बट देयर कैन बी another situation, another scenario where a change can be taking the supply curve on the one side and the demand curve on the other side. And what will be the ultimate change that we have to see. So for that we have taken the example of the business cycle downturn. Now a business cycle downturn will result in lower economic activity and therefore fewer bonds will be issued. When the fewer bonds are issued, what happens? The supply of bond is going to go down. And definitely a decrease in the supply will be shown with the help of a leftward shift in the supply curve. On the other side, whenever there is slowdown in the economic activity, of course investment activity by the investor will also decrease and the people will be investing less in the bonds. And again, a leftward shift in the demand curve. So our supply curve, which is a positively sloped curve, is shifting towards left, and our demand curve, which is a negatively sloped curve, is also shifting towards left. So these curves basically putting together is putting a pressure on the price in the opposite direction. Overall, whether the price is going to go down or the price is going to go up depends on the relative shift of the demand curve and the relative shift of the supply curve. If the supply curve is shifting more, then the price will go down. If the demand curve is shifting more, then the price may go up. But in general, during the recessions, what happens? Our interest rates go up and we see a downward tendency in the price level. So we may assume or we may expect that in general the price of the bond is supposed to go down and the interest rates may go up. ये तो वो सिनेरियो थे जिसमें हमारे पास एक ही फैक्टर इन्फ्लुएंस कर रहा था both demand and supply, and as a result they were moving in the opposite direction and putting an opposite pressure on the price level. So the final जो होगा that depends on the magnitude of the shift in the demand curve and the magnitude of the shift in the supply curve. ये तो हमारे वो सिनेरियो था जिसमें हम ये देख रहे थे कि ऑपोजिट में अगर ये मूव करें. बट इन जनरल मोस्ट ऑफ द टाइम देयर आर सर्टेन डिस्टिंक्ट फैक्टर्स जो कि हमारे डिमांड कर्व को ही सिर्फ शिफ्ट करते हैं या सप्लाई ही को शिफ्ट करते हैं, तो उसमें जो है हमारी पिक्चर जो है वो ज्यादा क्लियर हो जाती है. बट इन द रियल वर्ल्ड वी कैन नॉट अज्यूम कि whenever we are discussing the shift in the demand curve, the supply curve is held constant, or whenever we are discussing the supply curve, demand curve is held constant. So we need to look at all of these possibilities. ये तो था various factors and the influence of that factor on the demand and the supply curve. Now we are going to talk about another aspect of the bond, and that is the risk of the bond. ये बॉन्ड जो है उससे रिलेटेड किस किस किस्म के रिस्क जो है वो एक इन्वेस्टर जो कि लेंडर है और एक बॉरोवर जो कि इश्यूअर है वो जो है वो फेस करता है. सो देयर आर 3 कैटेगरीज ऑफ रिस्क. द फर्स्ट कैटेगरी ऑफ द रिस्क इज आवर डिफॉल्ट रिस्क, द सेकंड कैटेगरी इज द इन्फ्लेशन रिस्क एंड द थर्ड कैटेगरी इज आवर इंटरेस्ट रेट रिस्क. तो आज तो हम सिर्फ इनकी बात ही कर रहे हैं कि देयर आर 3 डिफरेंट सोर्सेज ऑफ रिस्क: डिफॉल्ट रिस्क, इन्फ्लेशन रेट रिस्क एंड इंटरेस्ट रेट रिस्क. तो इंशाल्लाह अगले लेक्चर में हम इनको डिटेल में जो है वो देखेंगे. बट बिफोर आई क्लोज द टुडेज लेक्चर, आई वुड लाइक टू समराइज कि आज के लेक्चर में हमने कौन कौन से टॉपिक्स जो है वो कवर किए हैं. सो टुडे वी स्टार्टेड आवर लेक्चर विद डिस्कशन ऑन द फैक्टर्स व्हिच कैन इन्फ्लुएंस द सप्लाई ऑफ बॉन्ड and the factors which can influence the demand for bond. The supply of bond may be said. The first factor can be the change in the government borrowing. कि अगर गवर्नमेंट जो है उसकी रेवेन्यू कम है और एक्सपेंडिचर ज्यादा है, तो in order to finance the deficit or the difference, the government can issue the new bonds. Then what will happen? The supply of the bond will increase, and as a result, overall prices of the bonds will decline and the interest rates on the bonds will go up, because we see a negative relationship between the price of bond and the interest rate or the yield of the bond. Then we say general economic conditions. If the general economic conditions in the country are good, then more investment projects will be undertaken, the corporations may like to borrow more, and the supply curve will shift towards right, and the prices of the bonds will go down and the interest rates will go up. Then we talked about the expected rate of inflation, and we said if the expected rate of inflation goes down or goes up, definitely there will be a change in the real cost of borrowing. तो अगर हमारी इन्फ्लेशन रेट बढ़ जाता है तो borrower के पॉइंट ऑफ व्यू से रियल कॉस्ट ऑफ borrowing जो है वो कम हो जाती है, and they will issue more bonds. The supply of the bond will shift towards right and the prices of the bonds will go down and the interest rate on the bond will go up. After this, we started talking about some of the factors which can influence the demand for bond. And then we started with the wealth. We said if overall wealth increases, then there will be an increase in the demand for bond, shifting the demand curve towards right, and therefore the price for the bond will increase and the interest rates will decline. Then we talked about the expected rate of inflation, and we said if the rate of inflation goes down, then the real return on the bond investment will go up and the demand for the bond will increase. So increase in the demand for bond will shift the demand curve towards right, resulting in a decline or decrease in the price level and increase in the interest rate. Then we talked about the change in the expected rate of return. If there is an increase in the expected rate of return, then the demand for bond will increase and the price of the bond will decline and interest rates will go up. And finally, we look at the risk. We said if the risk of the bond relative to the other investment opportunity, if that decreases, then the investment in the bond will increase, shifting the demand curve towards right and decreasing the price level of the bond and increasing the yield or the interest rate. Then we also looked at the liquidity of the bonds. If the bonds are more liquid, then what will happen? Of course, liquidity is a very desirable characteristics of any investment. So if the investment in the bond is liquid, then the demand for bond will increase, shifting the curve towards right and then resulting in a decrease in the price level and increase in the interest rate. And finally, we said there are certain factors common to the shift in the demand and supply. There we talked about decrease in the expected rate of inflation will shift both the curves in the same direction and the result will be very clear, decrease in the price level. But there is a possibility of one common factor shifting the curves in the opposite direction, putting an opposite pressure on the price level, and there we took the example of the overall economic activity. So that was today's lecture. Inshallah, in the next lecture, we'll continue with the same topic of the bond, but we are going to talk about the risk of the bond and the term structure of the bond. So आज के लिए डॉक्टर तलत को इजाजत दीजिए. अल्लाह हाफिज.